What's up, YouTube? I'm Adam Odell, Chief Investment Strategist of MoneyMarkets.com and founder and editor of Green Zone Fortunes. I'm joined once again by my research analyst, Matt Clark, for another episode of Ask Adam Anything. Now, Matt was not kind enough to let me know the preview on this question this week. He said that I would be able to speak about it off the top of my head because it's a topic that's near and dear to my heart. So I'm really anxious and curious to hear what that is.
Yeah, no forward advance on this at all. This is, I'm going to surprise him because I like to do that. As an investigative journalist, one of the best reactions you get is when you surprise someone with a question and you get that first initial look on their face and what it is. So, that's my goal today. So I do want to remind everyone that, we do this every week and we love to get questions from you. And if you do have a question you want me to ask Adam, very simply, just email us at feedback@moneymarkets.com. That email address will be down below throughout the video. You can also comment below here on YouTube a question you may have, and it can be anything. It can be anything related to a specific sector of the market, a specific stock in the market. Maybe there's a news item that has struck your fancy and you'd like to get Adam's take, anything like that. Or maybe you'd like to ask Adam what the meaning of life is. And anything goes, nothing is off limits, except for don't ask for his address or his phone number because I won't make him give those out, at least not yet, and maybe for a price. But anyway, to move on, it's not really a question per se, but this is an email that I came across, and I wanted to, because it really speaks to what you and I and Charles Sizemore really believe in, and what we tell people all the time on Money and Markets and through your services, Green Zone Fortunes and Home Run Profits. And I really want to get your take on this. So it's an email. I'm not really going to go into who it came from or where I saw it or anything like that, but I'm going to read the email in its entirety, and that gives you context and readers' context, listeners' context in terms of where this is coming from. So, and it says, I'm a buyer at a $1 billion retailer, and you really need to consider what actual buyers with boots on the ground are seeing as it relates to the economy. We've seen domestic freight double, ocean freight from China increase 4 to 5 times, steel up 27%, resin up 45%, 10% plus reduction in the US dollar against the Chinese yuan. Labor increases both domestically and abroad, and these problems will easily continue through the balance of 2021. Inflation is going to get very real in terms of inflation starting in Q3 and worsen in Q4. We also saw a negative shift in consumption starting in May that continues to show weakness through today. Your algorithms will not forecast this. Don't take my word for it. Just ask around, and the picture looks pretty grim. Tough time to be a momentum investor when the train is about to derail over the cliff. So now you understand why I thought this was perfect for you, and I thought it would be great to get your feedback on this. So Adam, I'm just going to let you go, and I might jump in if I have an insight, but probably not. I'm going to let you take this one.
All right. Well, that is a big ball of wax. Lots of data there and a very confident outlook that things are about to derail. And look, I'll make no bones about it. I am not a market forecaster. There's a gentleman called Philip Tetlock who did a lot of research on the ability of humans to forecast the future. And this includes people within a very specialized field. And he found that basically our predictions of the future are worse than a coin flip. We actually do worse predictions within our own field of expertise than we do in other people's field of expertise, largely because we become overconfident in our discretionary forecasts of the future. Now, this doesn't mean that you can't look at a trend, like an industry trend, or even a trend in a certain market, and do some if-then scenario analysis of the future. You can say, well, if this continues, I would expect it to go this far, or if this turns around, I would expect it to happen around this area. You can also do that on mean reversion. Like you can look at lumber prices and say, look, lumber prices have never been this high. They got here super fast, and that was because of a number of short-term factors in the economy that we can point to. And you can say, look, if I was to speculate a guess on the future, I would say there's going to be mean reversion in these high lumber prices, and they could come back down. So certainly, to some extent, investors, traders, speculators, that's what we do. We look into the future and we kind of make if-then scenario analyses about if something continues or if something were to reverse. But I will tell you, I've been doing this a long time. forecasting the future, forecasting the economy, forecasting when it is all going to fall apart is not the way to make money in this game. I've been a momentum investor for, going on 2 decades now. Momentum is all about following the price action. It's about following the trends and assuming that enough of those trends are going to extend for a further price action in a longer period of time than others might expect. So the other idea in this kind of rant that this person wrote in is that momentum is a bad place to be when the train runs off the track or the wheels fall off or whatever the phrasing was. That's another misconception. Momentum, the momentum strategy is not a long stock strategy. The momentum strategy is not a glamour stock strategy. So it doesn't, if you're a momentum investor, you don't just start reading the news and every hot stock that comes up, you start buying it and hoping for the best. That's not what momentum does. Momentum is based on price action and quantitative models that measure that price action and find statistically significant signals within the noise that allow you to know when to go long or short assets. So here's the thing. I've been running an options trading service called Home Run Profits since 2011. It's based on momentum, purely based on momentum. It's a go anywhere strategy. So we go long stocks when there are opportunities to go long stocks. We go long ETFs in alternative asset classes. So we go long commodity ETFs. We go long currency ETFs. We've been long the euro, the yen, the US dollar. We've been long municipal bond ETFs. We've been long treasury bond ETFs. We've been long volatility ETFs. We've been short stocks. We've been short stock ETFs, diversified sector and industry group ETFs via the purchase of put options. And those were all based on momentum signals. Okay. So we've basically run a service. We haven't had a single down year yet for the past 10 years, trading momentum only. Have we had a lot of long stock plays in there? Absolutely. Because the trend has been long. You don't want to fight the Fed. And that's something that I recognized very early on in this bull market is that the Fed was supportive. You don't want to fight the Fed. That doesn't mean you throw caution to the wind, but you certainly follow your momentum signals. And then you get out when the momentum goes against you. Sometimes you get out with a lesser gain than you had. Sometimes you get out with a loss, but ultimately you do that, you rinse, repeat, you move to where the sector and the industry group trends and momentum are. And if those show up in alternative asset classes, look, this question also mentioned inflation. Mentioned that inflation was going to start in the third quarter. Well, frankly, it actually started in the second quarter already. Will it continue into the fourth quarter? Nobody knows. The Fed wants to call it transitory, but I wouldn't necessarily trust them. But again, you look at the price action. Commodities are going higher. Well, that's an indication that right now, inflation is a dominant force in the market. If that turns back to disinflation or deflation outright, then we're going to see bond prices rise. So that's how that works. So you really can go anywhere with a momentum strategy. If you open up the universe beyond stocks, you're not tied to long stocks. And if a crash comes, if a meltdown comes, if a phase shifts between inflation and deflation or between growth and recession comes, that's going to be picked up in the momentum. So this idea that, momentum is a bad place to be when the wheels fall off or whatnot, and this idea that you can forecast the future with such specificity and such confidence really leads to a lot of, I think, poor decisions by a lot of investors that read the news and want to try to forecast the future. The last thing I'd leave this with is, and this is not like this is just a legitimate question, but whoever wrote this question in, or if anybody that's watching this video has an opinion on that, if you believe all those things are going to happen, inflation and the wheels are going to come off and the dollar is going to lose its status as far as the reserve currency in the world, then tell me what trade to put on, or tell me what 5 buy and hold positions you want to put in your portfolio to protect against that scenario. So it's really, at the end of the day, you got to put a trade on. Okay. So you can pontificate and speculate as far as what the risks are and what the timing of some catastrophe may or may not be. But at the end of the day, if you want to make money in this game, you got to put a trade on. So I'd love to hear either this person's opinion or anybody else's opinion as far as, what trade to put on in that type of scenario. Otherwise, I'm going to stick with my momentum strategy and kind of go where the trades are, where the trends are, where the momentum is. And I will be happy to adapt all along the way, as I have for the past 10 years. So I should probably shut up now. That is my rant on momentum. Momentum is not a long stock strategy. It's not a throw caution to the wind strategy. It is truly I think the most risk-averse way to go anywhere in the investable universe based on what's really happening rather than what you expect to happen in the future. So I'll stop there.
No, and that's it, right? Because when I saw this, my first impression was, I think this writer is really limiting the universe of which they're thinking in terms of buying and selling. And it's very important that you not do that, because if the broader market is down, well, there are other assets that go up because of that, and vice versa. If the broader market is up, there are other assets that go down because of that. So there's always going to be something constantly moving upwards in terms of momentum, regardless of where the economy is going and what the broader market does. There's just so many products, so many assets out there in place that it's impossible for one thing. If we see 4% inflation and the market tanks, we see a 5 to 10% drop in a period of a week. Well, guess what? There is an entire class of things out there that will actually move higher because of that. So you can't just limit yourself to just a single basket if you're going to do momentum investing like Adam does and myself and Charles Sizemore. It doesn't work that way. You've got to look at the bigger picture. So that was my first thought, and I think you captured that very well. So I think that's a good place to stop, just because
that's enough for 1 week.
My intention was to get a bit of a rise out of you and to talk more about and to kind of lead that into talking more about momentum investing and how it is one of those things that you can use across different market conditions. And I want to draw that out of you, because the other part of being an interviewer is that first off, you kind of want to know the answer to the question already, and you want to be able to get the person you're interviewing to say what you think they're going to say. And dead on, Adam O'Dell, you knocked it out of the park. So
you know me well, and you got me a little riled up. So I'll calm down
again, if you do have a response to this, or maybe you have a question that you'd like me to ask Adam, then please email me, feedback@moneyandmarkets.com, or you can drop a comment down below here on our YouTube channel. We'd love to do that. Check out some of our other video series as well. We've got the Bull and the Bear podcast. We also have Investing with Charles, where I join Charles Sizemore and we talk about the broader economy. And then I also do the Marijuana Market Update, where I provide you some insight into the cannabis market and cannabis investing. We do have a membership program as well. You can click join down below and find out more about what you get if you join our community on YouTube. So that's about it, Adam. I think that was that you untangled the ball of wax nicely, and certainly appreciate it. We're going to do it again next week. Look forward to it. So I appreciate it, Adam. Thanks so much.
Sounds great. Thanks a lot, Matt.